Texas and perhaps larger places. Mr. Paul.
Thank you, Mr. Chairman. I want to follow up on the discussion about moral hazard. I think we have a very narrow understanding about what moral hazard really is, because I think moral hazard begins at the very moment that we create artificially low interest rates, which we constantly do. And this is the reason people make mistakes. It isn't because human nature causes us to make all these mistakes, but there's a normal reaction when interest rates are low that there will be overinvestment and malinvestment, excessive debt, and then there are consequences from this. My question is going to be around the subject of how can it ever be morally justifiable to deliberately depreciate the value of our currency? And that is what we do constantly. I mean, we're in the midst of a crisis today, and the efforts have been directed toward propping up financial markets and Wall Street. First, the crisis is noticed. There's a panic. We dump in tens of billions of dollars into reserves, and that reassures the market. Wall Street feels a little bit better, and still not enough. Then we take a discount window, we lower the rates, and we don't look at our problem from what caused it. What we say is, let's make it a door, let's open up and lower the rates. And again, Wall Street says, oh, this is wonderful. Do the poor people like this, and do they respond? And is this going to help them get houses? When some of them couldn't even afford a house because even with the low interest rates that were available, because the costs are going up and cost goes up because the dollar goes down. Then even this week, what did we do? Our Federal Reserve lowers the interest rates by 50 points, and did the poor people and the middle class people say, boy, this is wonderful, my cost of living is going to go down, I'm going to get a job? No. Wall Street goes up 350 points. So it looks like everything is directed toward a bailout. Whether it's done deliberately or not, the American people see this as a deliberate bailout of the financial markets. The poor people are losing their houses. There's every sincere effort made to try to correct this, but it's inevitable that it's not going to work because the monetary system is such that there's so much misinformation. We talk about market discipline. You indicate, Mr. Chairman, that we should have didn't have enough market discipline. But there's no possibility to have market discipline when all the information is erroneous. Today, with this concept, and during this testimony, we see oil prices soaring over $82 a barrel. We see wheat and corn soaring. We see other commodity prices soaring. Gold, $730, $740 an ounce. There's a great deal of concern out there. This is all reflecting the fact that the dollar is going down in value. And if we don't deal with that, we can't solve the problem. And we look at this and think, well, we've created all these problems because we've had this malinvestment, all this credit going into the system, and we have all this correction that needs to come about, and we think we're going to solve the problem of inflation with more inflation. But really the bottom line is, what moral justification do we have to deliberately devalue the currency and the dollars that people save? This pushes the cost of living up for the people who don't even have a chance to buy a house. So there's a moral consequence of the system that we have today. And I can't see how we can avoid this moral obligation we have. The responsibility of the Congress should be to maintain the value of the currency, not deliberately tax the people by creating new money and passing on the high cost of living to the people who can least afford it. Wall Street never suffers from that, and we know of all these things out in the open that the Federal Reserve does, but we don't know the details of what the Working Group on Financial Markets do to prop up markets, because I'm sure they're very busy and have been very busy in these last several months. But is there any moral justification for deliberately devaluing the currency?
Thank you, Congressman. The value of the currency can also be expressed in terms of what it can buy in domestic goods, that is the domestic inflation rate. That is part of the Federal Reserve's mandate, which is to maintain price stability, which to my mind means the value of the dollar. The inflation rate is something we paid close attention to. We continue to pay close attention to, but over the last year it's been a little over 2%. We will continue to pay very close attention to the inflation rate. It's an important part of our mandate, and I agree with you that an economy cannot grow in a healthy, stable way when inflation is out of control, and we will certainly make sure that that doesn't happen.